Welcome to Insights. I'm Eric. Thanks for stopping by. We've got a new month here, so we have a bunch of new signals. We're not going to really talk about them. I suggest you download the matrix and you look for the flips and the flips that we see in green, and you look for yellow. What we're going to talk about today is the correlations, and then these are the trend disconnects that are down below. This is really just the profile between risk and price, shorter term mostly, and it gets a little bit longer term when you look at the different time frames. We have a 10-day here and a 4-week, and if they're in decoupling, it tells us that price and risk are falling out of gear, which is usually a warning. And that warning is usually framed against the trend and a shorter term trend. We look at the daily trend, say example, the S&P 500, which most of this is based, it currently is up. And we have a decoupling against a short-term uptrend. It warns us that that particular trend is vulnerable, and you're run the risk of entering into at least a short-term sell-off. Sometimes it can be even longer term. So the computer is identifying, you can count them, 1, 2, 3 decouplings across different time frames and different measures of them. This is the S&P 500 versus the VIX correlation. It normally is trending most of the time. It decouples when you have a problem underneath, and that's what we can see here. And this is the term structure of the VIX. It's currently trending in decoupling, but this is right at the cutoff. And what it tells us, if we slide down here, if you don't have the, if you don't remember from one time to the next, is you can come down to the timing in a crash and correction section here, and we can just look at it right here. I'll just highlight it. You can see we have 3 bearish decouplings, 1, 2, 3, and 1 bullish trending. And that pretty much clears things up. It shows us the daily is up, and then when we have a decoupling against that, it really is bearish, and it's a short-term signal that, well, I wouldn't even call it a signal. It's a short-term warning that that trend, that uptrend, is going to be vulnerable. And that's kind of what this was updated through yesterday's close. It's kind of what we're seeing again this morning as the equity market, it may not finish lower. You know, there's a lot more that goes on other than decoupling. You can see in the timing and correction section, there's decouplings and trend correlation, but there's all sorts of other measures, and it gives us a crash percentage and a stable percentage. Now it's at 60-40. This is a little bit of concern. This can get quite high. This got as high as, I think, about 80%, 20%, 80% correction crash, 20% stable when the market peaked out in 2021, and we had talked about it then. This is 60-40. It's not unusual, but the fact is it's not stable at 50-50 any longer. Probably a good reason for that loss of stability is this right here. And this places the S&P 500 at least at a short-term vulnerability. So keep an eye on these correlations, and this is not something that comes by every month. This stuff is updated daily. When you see decoupling, especially if you're trading the S&P 500 or the equity markets, and you have a lot of leverage against, whether it be an uptrend or a downtrend, these decouplings can go against up, they can go against down. It is something that's a warning, and you have to be prepared for some type of pullback that could take place. If you have any comments or questions today, let us know. If not, take a look at the rest of the matrix, look for the flips and look for the resets, take a look at the trends company tab. It's a new month, so we're going to have a whole bunch of new flips, and we'll try and talk about them throughout the week. So thanks for watching, and enjoy the rest of the trading day.